Then can you confirm whether you can see the slides?
Yes, sir, we can.
Okay, thank you. I'm opening the PowerPoint version, then I can use the pen there easily. You can see the PowerPoint version, isn't it?
Yes, sir.
Okay, thank you. Right, now let's start for the day. Now, today actually we are having an extra class, but at the same time, since we are using the day for an extra class, I thought of having the usual class also on the same day. So we are combining the Sunday class with the session we have today. So as a result, we have 4 hours of teaching today. I know it's a bit of long hours, but I think that will save some time for Sunday, and also I think we can have our discussion effectively uh, because in these two sessions I'll be basically covering the discussion on money. Uh, so I hope you have the slides with you, and also the new slide set I have shared a couple of days back. So the announcement is we don't have classes this Sunday, 25th, no classes, and we have classes usually on August 1st onwards, Sunday. Now I just need to check one more thing. Probably you can indicate your preference on the chat box. Now one of these 2 days, August 1st or 8th, I'll be having I will have to advance the class a bit, which means usually we start at 8 o'clock. On 1st or 8th, I'll be advancing the class to 7 in the morning, 7 a.m. Now it's not a unusual thing. When we had classes at IBSL, actually we started at 7, so that was the arrangement. So since we are on online, we have moved to 8 o'clock, but earlier we basically started at 7. So all in all, is it okay if I have the classes at 7 on 1st or 8, only one day? Any issue with that? 7 a.m. in the morning, on Sunday, 7 a.m.
On Sunday, 7 a.m., sir.
Yes.
7 a.m. to 9.
9, usually 2 hours, yes. Because I have another commitment at 9, that's the reason.
No, sir, no problem on
No
Sunday.
issue, no? Okay, right. Great. So you have to sacrifice 1 hour of your sleep, then join at 7. Okay, I'll confirm the date in couple of days, whether it is 1st or 8th, but definitely one of these 2 days. Thank you. So today, as I said, we have 4 hours long session. Probably you had some long hours in the morning as well, right? Did you have this class? Somebody told me you have this accounting class. You had it in the morning today?
Yeah, sir.
Okay. So
Thank you, sir.
another 4 boring hours to come in the afternoon. I know it's a tough time. Holiday, also noon after lunch. It's really, tough hours, but let's try to be interactive as much as possible. What we will do, we will first spend 2 hours and we'll take a break briefly, and then we'll join back. Okay. Yeah, somebody was saying you had classes in the morning also. So what to do? No, that's the part of your life. When you are in the studying age or mode, you have these issues. So let's try to be relax as much as possible. Okay. Okay, let me move back to my slides. Last week, we were talking about money, some basics, background. And I remember I talked about the evolution of money from early stages, which means from the barter system to the most modern type of money. Most modern type of money is virtual money, virtual uh, type of payment methods. Okay, basically using the uh, internet or cloud facilities, we make our transactions. So that is the most recent type of innovation. We don't know what will happen in the future, but up to now, we can see money has evolved in a revolutionary way. So it has changed in a way that has caused speeding up of transactions and also securing the method of transaction and also bringing some new risk as well. We know when we talk about the virtual currencies, there are some risks also involved. But the good thing is these transaction methods or payment methods have made the life of the people very convenient and less complicated. Okay, you can see compared to barter system where you need to carry a cow or a fish or a, a sack of grain. You can see how life has become very easy when you are only using a kind of a simple mobile device or even your wristwatch. So life has become that easy. With that, I think, sorry, I remember I stopped somewhere here, digital money. Uh, and I remember I was telling you digital money is a kind of a form of money used to pay for goods and services, oftenly based on the internet. So what happens, it allows some instantaneous transactions that you can do using this digital money, and also you can do borderless transfers of transactions. So you can do borderless transfers of ownership from one instrument to another instrument. You can use basically this digital currency even to purchase or buy securities somewhere else, not within the same territory, same country. And we have seen most of these digital currencies are not controlled by the authorities or by the central banks. So in simple, digital currency is a payment method that only exists in electronic form. When I say electronic form, it's actually on the internet, as I said. So basically it's intangible. So I already mentioned digital type of money is very easy, fast, right? You can do transactions in a minute, very cheap, which means affordability is high, and secure. Protection is there, right? You don't need to have your personal data involved, when you use digital currency. And it's a global currency. You can use anywhere, as I said, borderless currency. So those type of advantages are there. So among digital currencies, probably you may have heard the term cryptocurrency. So digital money is the broad universe or broader universe. Within that, you have a subset called cryptocurrency. So cryptocurrencies are actually digital currencies, right? But as I said, not all digital currencies are crypto, which means if you take the broader universe, if this is the DC, crypto is only one form of digital currency. So crypto means, if you search the term crypto on Google or Wikipedia, you will see the definition for crypto is actually something like hidden, some mysterious thing. So cryptocurrency is actually, created through some, algorithms which are not, which cannot be copied by someone. Sometimes you even cannot trace the origin of these cryptocurrencies. Okay. If these cryptocurrencies are issued by some regulated entity, or if it is issued by a central bank, you may call it as digital currency, or issued by the central bank, or central bank digital currency, CBDC. Right? So that is one thing. Another digital form of currency today we have is actually e-wallets, digital wallets. So it's actually an electronic device or online service that allows an individual to make electronic transactions. It's like a purse. To the purse you upload, you put money, right? You upload your purse by using currency, physical currency. Simply, in the same way, for a digital wallet, you can upload currency. You can store value and use it for electronic transaction. So people consider this QR code, and there are a lot of payment gateways now. Those are considered as digital wallets. For example, probably you may have heard the term Apple Pay, Samsung Pay, Alipay, right? Those are some digital platforms in the form of digital wallets or e-wallets that you can use for transactions. So this is a revolutionary situation in money uh, in the modern world. Now with that, let me go back to one of your papers, recent papers, where we have some discussion on this digital currency or e-wallets, right? So get ready with some additional, pen and a paper, because I'll be having some discussion on the papers related to this digital currency. So I'm taking here the September 2018 paper to talk about some of the questions related to this digital currency. So these questions are available at the end of these slides, but then and there, as you know, I'm taking some of these into discussion. So if you look at question number 3, part 3, 3.3, this is the question. Briefly explain decentralized cryptocurrency and digital fiat money. Briefly explain decentralized cryptocurrency and digital fiat money. Question 4 is also a related question. I'll come back to that later. Let's focus on question number 3. Does anyone have any idea about these two types? Decentralized cryptocurrency and digital fiat money. Anyone having any idea? Are you there? Can you hear me? Hello? Are we in the class? Can you hear me? I mean, I don't need the answer. Just let me know. At least you can hear me.
Yes, sir.
All right. You're there, right? So it seems no one is having any clear idea about what is meant by decentralized cryptocurrency. So let's start with the first thing, decentralized cryptocurrency. So how do you define it? So when I say cryptocurrency, it indicates some crypto type of asset, right? Crypto type of asset designed to use as a medium of exchange. You can use it for transactions or you can use it for store of value, right? So either of these purposes are served. So which means you can define them as money. So decentralized cryptocurrency is a digital asset designed to work as a medium of exchange using cryptography. I already mentioned to you, cryptography is, something like writing digitally that prevents identifying the way of writing, those or whatever. So that's how the security has been ensured in this cryptocurrency. Why do you call it decentralized? Because it has decentralized control as opposed to centralized control. What do you mean by centralized control? Now, if you take central bank money issued in the form of notes and currency, it is centralized control. The central bank has the control out of that. When you take electronic money, like, payment methods, ATM cards or debit cards, credit cards, smart purse, you have some control out of them, centralized control. But cryptocurrencies, no control, the control is decentralized. Decentralized means there's no single person who is having the ownership of this. Somebody might create it, he might have the ownership, but basically when it goes to public, there's no centralized owner. So this decentralized control of cryptocurrency works through a system called distributed ledger system. Probably you may have heard this word, distributed ledger system, where it serves as a public financial transaction database. So this distributed ledger technology is a kind of a public transaction database, a huge database, right? With some improved security features. So that is the simple definition of decentralized cryptocurrency. So when I say cryptocurrency, that's actually decentralized. Now, what is the most popular cryptocurrency in the world?
Bitcoin.
Bitcoin, exactly. So Bitcoin released in 2009, considered as the first decentralized cryptocurrency. First thing, and it's the most famous one. And once it is introduced, many people purchased it. The value went up very, significantly. I remember one time it went up sharply more than $15,000. Then it came down. The value dropped. Now I think again these days the value of cryptocurrency is very high. Bitcoin is I think more than $20,000 a coin. So you can see the value is very volatile. That's a disadvantage. Even though you can use it as a secure transaction method, the value is really volatile. And other than cryptocurrency, the Bitcoin, there are a number of cryptocurrencies around the world, more than 4,000 coins. Out of that, there are, some significant or some popular type of currencies. Like now the cryptocurrency is the largest share they have. I think closer to 30%, 40% of the cryptocurrency market is Bitcoin. Other than that, Ethereum, Ethereum, Ripple, Stellar, Litecoin. Likewise, there are more than 4,000 cryptocurrencies in the world. Okay, so that's the answer for the first part, decentralized cryptocurrency. Then we have digital fiat money. What do you mean by digital fiat money? Digital fiat money is actually centralized digital currency. Centralized digital currency means it's issued by a authority or a central bank. So I have given you the term here CBDC. CBDC means central bank digital currency, which is digital fiat currency. Now remember the word fiat currency. Fiat means issued by the government order. Earlier we were talking about physical fiat currency issued by the government. Now we are talking about digital fiat currency issued by the government, which is the digital form of fiat money. Okay. Now, I think Bank of England, they were the very first country to initiate global discussion on the digital fiat money. A lot of countries talk about these things. Now, in the modern world, there is a significant trend that the countries are considering to issue digital fiat money, that is by the central bank. Now, what you will see, similar to notes and coins you have, there will be money issued by the central bank in the digital form as well. I think Sweden, they have already done it. Sweden currency, now most of the currency it's in e-form, digital form. What do you call it? What is the currency of Sweden? Krona, right? So krona is the Sweden currency. Now they issue e-krona, where it's in digital form, which it is in digital form. So this is the trend right now. Most of the countries, they talk about this digital central bank issued currency. Now, this next question, 3.4, again related to these digital currencies. The question is, explain how the generally accepted objectives of a central bank will be challenged in an economy where decentralized cryptocurrency plays a significant role. Now, our discussion on central banking will be, I think, 2 weeks after. So as a result, probably you may not have very clear idea about what is the central bank's role or the mandate. In general, central banks are looking for the stability of the economy. Stability means two types of stability, the financial system stability and the monetary stability, which means price stability. Financial system stability means there is, very secure transactions, no bank collapses and all that. But when cryptocurrency is issued, it could be threatened, because sometimes you might not have, very clear control on the issuers of this money. There could be defaults, there could be scams, a lot of things could happen. So central bank's role could be basically, conventional role could be basically affected. Okay. On the other hand, Other objective is monetary stability, which means central bank has some control on money creation process of the economy and maintaining the prices of the economy. Even that could be challenged when cryptocurrency is there, because why? People issue currency, private currencies. So that private currency does not fall into central bank money creation process. It's not central bank money. But even if they are not central bank money, that creates demand for goods and services. So that could threaten central bank's objective of keeping prices stable. Okay. So people assume with the advent of this digital currency, the role of the central bank could also be basically changed, because it will be affected by the various ways of various methods of uh, digital payments. Okay. Any question before we move to the next part? Okay. Now there's another similar question in 2019 paper, September 2019. Question number 8, 8.4. List 5 examples for digital wallet used for payments and accepted by merchants globally today. And you need to briefly explain those things. So can someone suggest these payment methods, digital wallets, some examples? Hmm? I see a lot of answers here on the chat box, but I really appreciate if you can basically talk about these things. Okay. Now, what are these examples? For example, I already mentioned to you QR code. QR code is a kind of a digital wallet. Now we have these phone pay methods, right? Phone pay methods, they are like digital wallets. We have this Google Pay, Alipay, Samsung Pay, Apple Pay, all these, providers, they have digital wallet platforms. Hmm? I think someone has already indicated some, you know, answers here. Now in Sri Lanka, we have this Freemi, Jenny, right? Those are also some form of digital wallets that we can use for transactions. Okay. So I think you got the idea very clear. Uh, what do you mean by these digital type of currencies? Okay. In 2021 paper also there are some relevant areas. I think I discussed last week some of the answers relating to the functions of money played by these different forms of instruments, including cryptocurrency, QR code, etc. Right? Let's go back to our slides. Now, let's look at some of the classifications of money. These terms are used in our discussions sometimes. That's why I thought of having these classifications in this discussion. So, broadly, money can be divided into two forms: physical money and implicit money. Physical money, we already understand, that is money exchange for transactions with basically the coins and notes. Physically means you can basically touch, physically access this money. Implicit money is the other form. Those are like payment methods or deposited money in the financial institutions. For example, bank deposits, electronic cards, digital money, those are implicit money. So that is one way of classifying money. There's another reference to money, that is money substitutes, or sometimes we call them as near money, quasi money. Whatever we use, the same idea: substitutes, near money, quasi money, which means money other than coins and notes. Now, if you take the entire money stock, the universe, only this part is notes and coins. We already know this is physical money. But other than that, the large amount of money is in near money form, which means they are not currency notes and coins, but serves for money purposes. Again, bank deposits, credit cards, digital money, those are actually near money. So, why we consider them as money? We know notes and coins are the most liquid assets, which means liquidity is 100%. You don't need to convert into currency. Other type of money may not be 100% liquid, but they are highly liquid. They can convert it into cash quickly. For example, bank deposits and some short-term government securities, you can quickly convert into money, right? May not be 100%, but very close to money. So the moneyness, we use a word called moneyness. Sorry. Moneyness of money substitutes is very high. Okay. So those are the broad classifications of money. Then let's move to understand some of the characteristics of good money. So this was one of the exam questions in a past paper. The question was raised like, what are the good features of a developed or good monetary system? So in a good monetary system, we might observe some key characteristics. What are these key characteristics? A good money, a monetary unit, should have this general acceptability. I think we already discussed last week what is meant by general acceptability. Everyone should accept in the society for the transactions. So that's clear. Second, a good monetary system should have stability. Stability means the prices should not change drastically. I told you Bitcoin is not a good monetary unit because its value is very drastically changing very fast. no stability. So good money should have stability, which means value should not change very frequently. Scarcity, which means such monetary unit should be available in adequate form. There should be adequate level of money, but not in excess or abundance. අර ගස් යට නිකන් මේ කොස් ඇට වැටලා තියෙනවා වගේ සල්ලි තිබුණොත්, right, what will happen? That will be basically leading to lose the value of money. Then we have portability. Portability means you should be able to easily transport if it is physical, or if you should be able to easily basically transfer this money. Portability indicates that. Durability, if it is in currency form, it should be durable. So for example, some currency units, if it is in currency notes, you cannot use for a considerable period of time. It easily gets damaged. But a good monetary unit, it should be have durability. Divisibility, should be able to divide into pieces, small value denominations. Recognizability or cognizability means you should be able to identify money very easily. It has some unique features. Homogeneity or uniformity means money should have the same denomination, should have same size, same color, some uniformity should be there. So basically these four type of things, of basically these five, are mainly applicable to physical currency. But if you consider the most important characteristics of a good monetary unit, I would suggest the first three are the most important: general acceptability, stability, scarcity.
Excuse me, sir.
Yes.
According to the value, we are not to accept the Bitcoin. That's mean it's changing now always. Dollars also change now, sir. The
But
currency.
it's changing, but if you look at the changing speed of change or volatility is very low. Have you ever heard of the dollar value goes to very high level, like compared to, let's say, some other currency, it's getting very strong and very weak? No.
Okay, sir. Thank you.
But if you consider Bitcoin, the change in the value is really significant. Now, sometimes back, I remember the Bitcoin was $6,000. Now it's 20,000. So how much is the change? More than 200%, isn't it? That's what we are saying.
Okay, sir. Thank you.
Thank you. Any other question? Okay, let's move on. Have you heard this term before? Money printing. Probably you may have seen this term very frequently in Sri Lanka recently. Money printing, which means in singular
The
thing.
COVID,
Eh?
the COVID situation, sir.
Yeah, after
When
that,
they distribute 5,000
yeah,
among the.
yeah. Some people say it's heavy money printing, right? Money printing means you basically uh, print money and allow people to use it. That's the idea. Now, when you say money printing, what does that mean? It indicates central bank introducing new money to the economy. So the term money printing indicates the central bank introducing new money into the economy. It's not that the central bank is, printing money in the, like in this picture, central bank is, basically manufacturing or printing money in the press and issuing it. So this action and the term is not equal. When you hear the term printing, you might think, okay, the central bank prints money and put it to the system. It's not the case. Central bank money printing means introducing new money to the economy. So unless central bank releases such new money to the economy, you cannot say it's money printing. Now in central bank vaults, you have, these printed coins in billions. So in the press, you print money, and in the vaults, you have these printed money in billions. But it does not become money, or it is not called money printing until it is introduced to the economy. So when central bank introduces money, even that cannot be done as the central bank want, right? You can't simply print money and inject into the system. For that, you have to have a transaction. So these transactions are basically domestic transactions or foreign transactions. So when central bank conducts foreign transactions, that could lead to introduce new money. I have some slides on this later on, right? Then you will understand. When central bank conduct foreign transactions, that could lead to inject new money. Central bank conduct domestic transactions, which means giving a loan to a financial institution. That will also print new money, which means you issue new money to the system. So money printing is closely related to central bank transactions, not this printing in the press. Okay. So even these central bank transactions are based on economic fundamentals. You cannot do transactions as you want. That's actually should reflect needs of the economy. So all in all, money printing is a scientific process. But someone can misuse it. Government can misuse it. For example, a government can instruct the central bank to buy securities as much as possible, give loans to others as much as possible. So that of course creates money. These things have happened in some other countries. Now, for example, in modern days, the best examples for excessive money printing we talk about is Venezuela and Zimbabwe. People say the hungry rulers of Zimbabwe, they have printed enormous amounts of money through the central bank. So what I'm saying, the money printing is basically a kind of a scientific economic process, not a political process, but it can be manipulated by someone, politicians. The role of the central bank is to manage that, managing the issuance of money to the economy. Because as I said, you have to ensure adequate level of money to the economy. If you put more money to the economy, that is also problematic. If you put less money to the economy, that is also problematic. So you should ensure adequate amount of money to the economy. That adequacy is ensured through this process of money printing. Any question? Is anyone having any question? I see someone was basically sending message. I can't see this chat box when I'm on the full screen. Can you raise your voice if not, if you don't mind, please? If not, I will only be able to see the question later. Okay. Right. Let's move on. Price of money. Now, generally, as we have already seen, money is an asset. Money is a commodity. So that any commodity, any asset has a price. Similarly, money also has a price. Or you can call it the cost. So cost of money is nothing else, interest rate. So interest paid for borrowed money. Now, if you borrow money or if you borrow money from someone as a deposit, that is actually incurring some of the opportunity cost. Why? People could use such money for something else. Now, if you deposit money in a bank, without depositing, you can use it for transactions. You can consume. You can do some investment. If you are a bank, if you give a loan to someone, without giving that loan, you can use it for something else as the bank. Maybe you can do any other investment without giving a loan. You can buy gold, for example. You can buy some other assets. So there are some alternatives. The price of this alternative, when you sacrifice it or forego it, you call it the opportunity cost. So you are paying this opportunity cost when you use money. So that opportunity cost is the interest rate. So price of money is nothing else the opportunity cost of using money by the people uh, in the society, which is measured by the interest rate. The other thing, now we have seen there's a price for money. So price for money is basically decided in the economy through transactions. Two types of transactions. What are these two types of transactions or the forces? You have a demand for money, you have supply for money. Usually this is the normal demand supply curve, right? Supply curve is upward sloping, demand curve is downward sloping. The interaction is determining the price. This is simple economics. So in money, this price is the interest rate. And also there's another thing, in money, you don't have this type of supply curve. Basically, your supply curve is like this, constant one, vertical one. Why? That's determined by the central bank. Hmm? So if it is determined by the central bank, the interest rate will only change because of the change in the demand, right? So any change in the demand will change the interest rate. If by chance central bank decides, okay, this is the central bank money supply, no? So if it decides to increase or decrease money, then the interest rate will change. Let's say the supply of money is increased from S1 to S2, then interest rate will respond, right? All in all, the interest rate is determined through the supply and demand for money. So we'll have to have some understanding about demand for money. How do you define demand for money? Is defined as the quantities of money held by the people at various interest rates. Quantities of money held by the people at various alternative interest rate. This term Latin, oh sorry, Greek Latin term, right? Ceteris paribus means, sorry, this one indicates everything is constant. This is a term used in economics. In economics, we use this term ceteris paribus to indicate everything is constant. So assuming everything is constant, the quantities of money held by the people at various interest rate, you call it demand for money or liquidity preference. This is the term used in economics, liquidity preference. Now we know when people have money in their hand, there's no gain out of that. When you have money in your hand, you know there is no additional gain that you can receive out of such money. But still you prefer to have some money. Although you don't have any interest, if you hold it, still you want to have some money in your hand because of various reasons. So we'll look at these reasons in the following slides. For that, we are actually depending on some theories of money demand. Now this part actually not in your exam, theories of money demand. But I'm just using these two people and their concepts to give you some understanding about why people keep money in their hand, right? So there are some famous two famous persons uh, called Irving Fisher and John Maynard Keynes. Fisher and Keynes both are economists who lived around 1930s, 40s, 50s. Their work was very, famous during that time. Irving Fisher actually he's an American economist. Keynes he's a British economist. Actually, he is Lord Keynes, right? So these two people suggested some important concepts related to money, particularly related to demand for money. So this is Fisher's idea, demand for money. You call it classical theory of demand for money. Some people use it as QTM, quantity theory of money. He suggested one important thing. What is the important thing? He said, when income is increasing, demand for money would increase. So he basically mentioned why people keep money as their income increases. This is not wrong, isn't it? If you think about yourself, when you have more money, more income, you tend to keep more money in your hand. So income is basically a key factor in deciding the level of money in your hand. So based on that, he basically proposed this equation mv equal py. This is the so-called quantity theory of money. Now in this equation, this is important because in the next week we are talking about this monetary policy. So when we talk about monetary policy, this is important. Why it is important? It tells us the relationship between money, income, and inflation. Money, income, and inflation. Now, for your benefit, what are these terms? MVPY. M means money. V means velocity. Velocity means how speed money is circulating in the economy. What is the speed that the money is circulating in the economy? That is the V. We consider this V as constant. Then P is the price. Y is the income. Income means the production in the economy. So generally, we consider this production is also constant at a particular point in time. So that suggests when M changes, the P would change. So there is a relationship between M and P very clearly. This is referred to as quantity theory of money, and which considers money as the source of price changes. Some people in modern times dispute this idea. Some people say, okay, whatever or which amount you inject to the economy as new money, it won't have any impact on prices. Some people argue that way. Some people say, no, it has some validity. There are some historical evidence. So it's not the time that we can basically argue on that. You have to prove it using data. But in the past, for sure, for century, we have seen there is a impact of money on inflation. When you inject more money, people would demand, inflation would be created. That is the general situation that we have seen. Any exemptions we have to empirically test. So the key message out of this slide is money is dependent on income, money and prices have a relationship, positive relationship. Here also you have a positive relationship. When income increases, money demand increases. But in this Irving Fisher's idea, interest rate is not considered. He has not focused on the interest rate. Now, this deficiency is addressed by the other theory by Keynes, liquidity preference theory. So, there he considered interest rate as one of the key variables. He actually looked at two major variables, income and interest rate. He used R. Both are significant factors to decide on money. He mentioned people demand money for various reasons. People would like to hold money for various reasons, at least three major reasons. So you call them as motives for money demand. Now this part, although the theory of money is not directly linked to your exam, this part is one of your exam questions. What are the key motives for people to hold money? So there are at least three major motives: transaction motive, precautionary motive, speculative motive. Transaction motive means you basically hold money for your everyday purchases, transactions, to buy food, to buy groceries, to buy a pen, to buy data, to pay for mobile, to travel on the bus, or any other transport. You keep some money with you, holding money for transactions. That is transaction motive. Second one, precautionary motive. People hold some money as a safety measure for unforeseen events in the future. Right? Now, for example, if you consider yourself in your wallet, you might have some money for day-to-day purchases. At the same time, you keep some amount of money with you as a safety measure. That may not be in your purse. Even some people have a nice way of precaution. You put the additional money also in the same wallet in a hidden pocket. So you cannot call it as precaution. If it is lost, everything is lost. Precaution is basically you keep some money for the contingency. You keep some money maybe under your tablecloth, maybe under your pillow. Earlier days, people used to pot and you bury it, right? Some money in cash form for the unforeseen event. You call it precautionary motive. Third one, speculative motive. This is actually holding money for financial gains. What are the financial gains? You think or you assume in the future the market interest rates would change. Stock market prices will decline or increase. Bond prices will increase or decrease. Land prices would change. Gold prices or gem prices would change. Now these days you see this story of the most precious gems, right? They call it you can't value the price. Probably someone who is looking for investing on those three gemstones, keeping some money for that purpose. So you call it speculative motive. Holding some money, anticipating some financial gains, or through speculation. Speculation means you basically looking at the future and with some anticipation. In Sinhala, you call them means call these motives as Chetana. So if you have a student called Chetana, you can call her as motive. What are these chetanas in singular? Transaction means ganudenu chetana. Precautionary motive means purvopaya chetana. Speculative motive means samapekshana chetana, which means you anticipate some changes and act accordingly. So keep in mind, this is an important part in your exam. So what we have seen from these discussions, there are three important factors affect money: income, interest rate, inflation. We have seen with income and money, there is a positive relationship. When income increases, money demand increases. With interest rates, there is a negative relationship. When interest rate increases, people will hold less amount of money. Now these days, if you can very easily put this into into practical economics. Now these days, if you look at, people don't keep money in their accounts. Why? Interest rates are low. No point. People keep more money in their hands for transactions, for buying things. Now I heard these days, the land market is booming, apartment market is booming, other durables market is booming. Only thing is you don't get good durables these days because there are import restrictions. But otherwise, when interest rates are low, people are investing on those things. Why? Interest rates are low means you are not motivated to keep money in your accounts. So there is a negative relationship. With inflation, there is a negative relationship. Why? Actually, here we talk about not the current inflation, expected inflation, what you expect for the future. So if you anticipate inflation to be higher in the future, you keep less amount of money with you. Why? The value is eroding with inflation. Okay. So this is basically the reasons for people to hold money, and we have basically come across some of the factors that determine the. So if you look at these questions, you will see what I have discussed is directly in your exam questions. I'm not going to details in these questions, but if you have a kind of an overview, you will see what I have discussed are basically, for example, here you have key functions of money. Remember we discussed at the beginning, medium of exchange, unit of value, storage of value, deferred method of payment, we have discussed. We talk about gold standard, remember? We mentioned it's an important era of money evolution. We talk about virtual currency, right? So then you have some questions again. Here, what are the three motives for money? What are the key factors determining the motives? So if you very closely and thoroughly follow my discussion, even now you can answer these questions. Again, briefly explain functions of money. What is the difference between gold standard and modern currency systems? I think you remember gold standard very well. We discussed it's actually attaching the currency value to a particular level of gold, right? Modern currency systems are basically fiat systems, even digital fiat systems, right? So I think here we have this differentiation. What is the difference between currency and implicit money, right? Key functions of money: gold standard, virtual currency, generally accepted key objectives of central bank. I think that we have to discuss next week. Here the question I mentioned to you. Briefly explain decentralized cryptocurrency, digital fiat currency. We just discussed today. Then in 2019 you have this question: compare and contrast cryptocurrency and normal currency. Again, we have some idea on that. This one actually we discussed last week. I hope you remember. Only this part has to be discussed here. Briefly explain how central bank injects new money, which means the money creation process. So that we will discuss in the next part. So I already mentioned this thing. List 5 examples of digital wallet. Right? We already covered this. So for this part, actually, if you read this textbook, Survey of Financial System, I think that will give you some good idea on money, its evolutionary process, and a lot of related issues.
Sir,
Yes.
from where we can buy it?
I think the book was published by, let me check, the central bank, actually, printed by the central bank. I am I remember it was distributed by, I think, Sarazavi Publishers.
So can we go get it in online? Google, if we Google, can we get it?
I'm
No,
not
I
sure.
checked.
It's not available, right?
Yeah, sir, I checked it.
Right. So probably you can check with the bookshops. Give a call to Sarasavi and see. Probably they might have. Uh, Earlier, central bank counter also had the copies. So if you call the central bank publication counter, they will also tell you whether they have copies. But I'm sure this is available in the IBSL library. Unfortunately, you can't, access the library. Let me check whether I can, some extend some help on that. Whether I'm not so sure whether we can, scan this book and make available because it has copyrights. But let me check with the IBSL and we'll try to do something, right? Don't worry. Check yourself whether it is available on the bookshops. If not, just let me know the book is not in the stores, and we'll try to do something. How about your other textbooks? I think for our other subjects, are they available online from the IBSL, or how it works? Any feedback on that? Hmm?
No, sir, we don't get these kind of things for other subject.
All right. Okay. Let me check with the the IBSL. Okay.
One more request, sir. If possible, to share these past papers, so we can do the questions after the one topic is finished.
I think
Until they
past
wait,
papers, the
they s-
arrangement is from the IBSL. You have to request, right? Past papers. They have
no,
this.
sir, they said they will send. That is a free of charge for this year.
Right. But still, you didn't
So
get it.
yeah, because I think they will wait for until it's finished. Before that, if they send us, that will be for all.
Right. Okay. I'll talk to IBSL and see whether we can, I mean, arrange something. Right.
Thank you, sir.
Sure. Any other views? Any question? Shall we move to the next part of our discussion? If you don't have any issues.
Excuse me, sir. Is
Yes.
money laundering and money printing are same?
Two different concepts. Money laundering means actually, now probably you might have some idea, people earn in legitimate way and also illegal, isn't it? People earn through good economic activities, accepted economic activities, and also people earn through illegal activities like drug dealing, arms dealing, people smuggling, child smuggling, pornography, prostitution, right? There are a lot of illegal ways of earning money, and also tax evasion, isn't it? Out of these things, people earn some good money, substantial amounts of money, which you cannot divulge information, or which you cannot, publicize it. So you call them as illegal or black money or black economy, right? In money laundering, what happens through the banking system, people try to add these illegally earned money into the formal financial system. For example, using such earned money, people might buy stocks, people might buy bonds, people might buy real estate. That is called money laundering. Laundry means basically what happens in a laundry, you wash it and make it clear, right? Similar thing happened here. Illegally earned bad money is added to the proper financial system through transactions. That is the process of money laundering, which is not permitted legally. In countries, there are a lot of laws against money laundering. And not only money laundering, there's another concept in modern world, CFT, combating financing of terrorism. That is also illegal. Those come together actually. Probably you may have heard the term AML and CFT, both together. Both are prohibited. Money printing is not prohibited. It's a legitimate action.
Excuse me, sir. Just for the confirmation,
Hmm.
if any political party involved for the money printing, is that coming under the FI, this AML?
No. Any politician or whoever, if they have earned money illegally and that illegal money is used for financial transactions, that is money laundering. That is
I'm asking about the printing. When we do the printing, according to the political kind of pose, so central bank has to do something. Is that
that is
according
not
to them? They
that is
according
not
to their
that is not illegal. That does not be categorized as money laundering. That is money printing. Only thing, the central bank, even now, some political pressures are there, to be frank, in any economy, right? Whatever the political pressures are there, the central bank cannot inject money without any reason. They have to do some transaction, as I said. At least you have to buy government bonds, bills to inject money. Otherwise, there's no way. The central bank cannot, take a truck of banknotes and go out and distribute. It's not possible for the central bank. To do that, central bank should go to the market and buy assets, then only money will be injected to the economy. Clear?
Yes, sir. Thank you.
Okay. Good question.
Sir, what AML stands for?
Anti-money laundering. Okay.
Thank you, sir.
Anti-money laundering. CFT means combating financing of terrorism. Right? Okay. Good. Now let me escape from this slideshow. I'll check your. Someone has said the book might be available at Boralla Sadipa. But the only issue is if you are living far away from Colombo, it will be a problem. But I know this Sarasavi has a lot of branches, right? Check with them. Someone asked what will happen if we pay all the loans which was taken by other countries by printing money. Simply, you can't do it. Why? You can't print dollars. You can't print sterling. You can't print yuan. We can only print rupees. Domestic loans you can pay by printing money. But foreign loans you can't pay.
But
Unfortunately,
sir, we can change and pay, no, sir.
change in
The
the sense
currency, the exchange the currency.
that's possible. You can print money and using that printed money you buy dollars and pay. That's a possibility. Okay. Right. Let me share the next slide set. Money too. So up to now we have talked about actually money demand, right? Last slide, 2 slides were on money demand. Now in this session, we will be basically looking at the supply side of money. Supply side of money, right? So the entire discussion will be based on supply side of money. Now, in the economy, we know there is money used by various people. We call it as money in circulation. People have money in their hands. People spend money here and there. That money in their hands because it has been issued by the central bank. If you open your wallet and if you check, you might have, 1,000 rupee note. You have that in your hand because central bank has issued that, released that to the economy. So this money is used for transactions. Money is in circulation is used for transaction. Now that 1,000 rupee note, you might go to a shop and buy something. So that is used for transactions. Now at a particular point in time, if you take the entire stock of money, you call it money supply. Total stock of money in circulation at a certain point in time is money supply. Now let's say today, 23rd July 2021. Now if you measure all the money available in the economy today and compute it as a stock, that stock is basically money supply. This is fixed in the short run. As I said, remember, if you draw a simple diagram, money supply curve in the short term is like this. It's fixed. One reason, this is basically handled by the central bank. It's under the control of the central bank. So it's fixed in the short run. The other point, this money supply has different components. Now, even though you call it money supply, there are various components included in this money supply. Those components, when you measure those components, you call them as monetary aggregates. So if you take the entire universe of money in the economy, M, this M is formed by various monetary aggregates. Like I have given names here, M0, M1, M2, M3, likewise. There are various definitions for the monetary aggregates. So that's how this broad M, total M is created. So we will see what are these M0, M1, M2, etc. in the following slides. Okay. Now let's come to the idea of money creation. Here we have money supply. Now we are coming to the idea of money creation. Now, when you look at this money supply, as I said, at a particular point in time, you will see that money supply is greater than the money issued by the central bank. In other words, money available, more money is available in the economy than the money issued by the central bank. Now I told you, in your wallet you have 1,000 rupees. Now assume that is the only money issued by the central bank. You have that 1,000. Central bank has issued 1,000 only. It is with you. But if the central bank measures the total money supply, you will notice it's not 1,000 that you have. It could be 10,000. So which means more money is available in the economy than the money issued by the central bank. Now, for example, in Sri Lanka, in 2020, based on 2020 numbers, annual report numbers, you will see, I told you, now here we have different components. So out of these components, one component is reserve money. In Sri Lanka, you call it reserve money. Actually, it is M0. This reserve money or M0 is the money issued by the central bank. What actually the central bank has issued to the economy? Basically, notes and coins. There are some other components also. We'll come back to that point in a while. But predominantly, notes and coins. So in 2020, what we have issued as the central bank is M0 is 965 billion rupees. So if you have 1,000 note in your wallet, that 1,000 is part of this 965.
Excuse me, sir. So
Yes.
when the reserve is coming, sometimes in the COVID period, we have seen central bank given loans for the bank for do the moratorium system like that. And I can't remember the name of the loan. Laksetsaya or something kind of I can't remember that singular name word. Relief kind of relief loan. So that also coming under this reserve.
Now, shall I explain that in a while when we come to this reserve money, right?
Okay, sir.
Then
Okay,
you
sir.
will understand the concept very clearly.
Okay, sir.
Because that reserve money you can weave from two angles. What you are saying is basically part of one angle, right? When we talk about, remind me, what's your name, please?
I'm Quilini, sir.
Quilini.
Quilini.
Quilini. Okay,
Yes,
Quilini. Sorry.
it's okay,
Uh,
sir.
we'll come back to that point, Quilini, when I talk about this reserve money in detail, right?
Okay, sir.
So what I was telling is in 2020, the central bank has issued only 965 billion, but in the economy, this total M, the big M, you call it broad money, was 9,406 billion. You will see approximately 10 times higher. So if this is the central bank issued money, this simple circle, in the economy, you have money something like this, 10 times higher. Why is that? Because of the process of money creation. In the economy, money supplies increase due to bank lending and deposit taking. This is simply central bank issued money, but in the economy, during this entire period or entire space, a lot of transactions happening in terms of bank lending and deposit taking. That creates more money in the economy. So if a bank makes a loan, it's simultaneously creating a matching deposit in the borrower's bank account, which means creating new money. If you take a loan from a bank, every time when the bank gives you a loan, it creates a new deposit under your name. In the bank books, there's a new deposit created against your name. So this process, when it continues, it creates more and more money in the economy. So you should be clear. There are two players in terms of money creating in the economy, the central bank and the banks. When I say banks, it could be commercial banks, it could be other type of banks, even the finance companies, right? Broadly, what we are talking is financial institutions. But one thing, when I say banks or financial institutions are creating money, that's mainly possible through the current accounts. When banks are having current accounts, you can easily create money. through lending and borrowing process. So as a result, when we talk about money creation, we mainly talk about commercial banks here. Commercial banks are actually the banks who are having current accounts, right? So through these current accounts, we can create money. So as I said, both the central bank and commercial banks create money. Central bank is creating base money or reserve money. The name base money, base means that is the foundation of monetary stock, money stock in the economy. Sometimes you call it reserve money. In Sri Lanka, we use the term reserve money. In some countries, you call it as M0. How the central bank is creating new money? As I said, Quilini, there are two sides of the same story. Central bank creates new money by introducing physical currency to the economy. When central bank releases new rupees and notes, that's new money. That's actually part of reserve money. Such a situation in terms of monetary policy, we call it as expansionary monetary policy. So when you look at the accounts, when you see new money is releasing by the central bank, that's releasing base money or reserve money or M0. But the other side of the story, the central bank cannot do it unless it purchases financial assets. That's what I said. The central bank cannot simply take a lorry of coins or notes and distribute in the village, having a loudspeaker announcing and come and get this money. Likewise, the central bank cannot distribute money. Why? It has to purchase financial assets to do so. What are the financial assets they do? Government securities, foreign currencies, they buy those things. And then lending to financial institutions, giving loans to banks and other institutions. Now you ask a question, Koilini, whether these loans given by the central bank, is it new money?
Okay, sir. Thank you.
Yes, it's creating new money because it's giving loans to the financial institutions. So this is central bank role. Then, as I said, banking system, the commercial banks, they also contribute to increase total money supply in the economy. We call it as broad money or M, sometimes M2, M3, M4. Likewise, there are various definitions. But if you simply look at broad M, that indicates the broad money or total money supply in the economy. How it happens? Again, as I said, two sides that we can look at. When you see deposits are increasing, that is creating new money. Banks are getting more deposits means that is expansion of money supply. How it happens from the bank side? They also cannot, simply expand the money supply. They also purchase financial assets. What are the assets? They can also buy government securities or foreign currencies. And their main business, as you know, is what? Lending. They can lend to the government, they can lend to the corporations, they can lend to the private sector. In most economies, the private sector is the largest borrower. You, me, and people like us, when you go to a bank and ask for a housing loan, personal loan, education loan, agricultural loan, SME loan, any loan will fall under this private sector loan. So as we borrow, we create more and more loans, which means financial assets to the bank. If you take a balance sheet of a bank, the loans are under asset side. So as we increase loans, that indicates we are increasing the money supply. Correspondingly, you will see other side deposits are also increasing. So this is the scenario. Now in the next part, I'm basically explaining the technical process of this money printing. So I think money creation discussion would take some time. Probably we might take a simple break here, few minutes. Would you like to have a 10 minutes break? And we'll start in 10 minutes. Or you want to continue? So this might take roughly half an hour, 45 minutes, this part. What do you prefer? Finish this part and taking a break, or you will continue, take a break now and then continue?
We'll continue, sir, after break.
We'll continue after break means we take a break.
I prefer.
Okay. How about others?
Yes, sir. Break.
Okay, we'll take a short break of 10 minutes and come back, right? Okay, let's start. Now we are looking at money creation process of the commercial banks in a detailed manner, right? Now we have already seen uh, the total money in the economy, basically broad money, as the big universe or the bigger component in the economy. And we have seen this broader component is higher than the quantity issued by the central bank, which means base money. So within these two, actually, there is a link. We have this base, we have this broad M. This B becomes M due to multiples or multiplication of this base money. That process is simply the money creation process.
So we can't see the slides.
Exactly. Okay.
Yes, sir.
Now,
Yes, sir, we can see.
okay. Sorry about that. So what I was telling is actually this B, the base, becomes M in the economy basically due to multiplication of money, base money. So there would be multiples of base money in the economy. That's how the large M or the big M is created. This process we call it as money creation process. So money creation process actually can be identified through this money multiplier model. So money multiplier is simply the ratio between this simple B and large M. Simple B and large M. So that money multiplier can be defined as large M divided by B. In other words, the ratio between M and B. Now, when you have this equation, you know, out of this, you can derive either M or B, right? So even if you say like this, it's the same equation. So what is this money multiplier? It measures the maximum amount of commercial bank money that can be created by a given unit of central bank money. If one central bank money unit is injected, how much commercial bank money can be created? That is the idea. This happens in the banking system not with a single bank but with the entire banking system. So money creation takes place in the banking system and with not the single banking system. So it indicates, let's say in the banking system you have 10 banks, A, B, C, D likewise, and there is a central bank, right? So creation process happens not with the central bank and bank D, but with the central bank and entire banking system. So let's take a graphical illustration for this. Okay. Now, in this illustration, we try to understand the money creation process. So for that matter, we have some assumptions. What are the assumptions? Central bank increases currency in circulation by 100. Now, when you say central bank is increasing currency in circulation by 100 means that indicates B, the base is increasing by 100. So out of this base, people keep 5% as income in notes, coins. 5% of this income as in notes and coins. Remember money demand, people keep 5% for money demand purposes. They need money for transaction, precautions, speculations. For those matters, people would keep some amount of money with them. Then the balance is deposited in the banks. That balance 95 is basically deposited in the banks. That is the other part of the assumption. Then another assumption, the banks, commercial banks, they maintain 10% out of the deposit as a reserve. When the commercial bank receives a deposit, out of that deposit, they keep 10% as a reserve. That reserve actually, they don't keep it on their own or voluntary. That is actually a requirement of the central bank. The central bank tells them, okay, you should keep 10% with you. With you means they have to deposit that 10% with the central bank. In technical terms, you call it statutory reserve ratio.
But sir, it's now 2%, right?
Now in Sri Lanka, it's 2%. Yes, true. Now here for the illustration purpose, we assume as 10%. Okay. This is an example. So in some countries, you call it as cash reserve ratio, CRR. In Sri Lanka, you call it statutory reserve ratio. As someone said, now it is 2%. But for our convenience, we have assumed it as 10% for this example. Right? Now let's see what happens in the banking system. Let's say a person is getting this 100 base money to his hand. Okay. Now central bank issues money. That money comes to the general public, right? People will hold that money. So this person get 100. Now he decides out of this 100, he will keep 5% for his purposes. So cash 5% is kept with him. 95 is deposited with the bank. He goes to bank A and deposits 95. Now the bank receives a deposit of 95, and we know bank's major business is giving a loan. Now the bank cannot give away this entire deposit as a loan. Why? They have a requirement, they should keep 10% with them. So by keeping 10% with the bank, the balance is given as a loan to another person. So the loan value now 85.5, that loan is taken by this person, right? Now what will happen? This person is having cash of 85.5 in his hand. Now let's say he is entering into economic transaction, whatever, building house or buying a car or whatever, right? So he is giving this money to someone else. What will happen? Now the person who receives that 85.5 will keep a portion with him, 5%, that is 4.2 in currency terms, and deposit the balance in bank B. He goes to bank B. So he keeps 4.2 out of 85.5 and deposits the balance 81.2. So bank B is also a business making bank. They will also keep 10% with them, and the balance 73.1 will be given as a loan. Same continues. Another person will get this cash, he will keep a balance, the balance will be deposited, and then another loan will be given. Until this first 100 becomes zero, this entire process will continue. And you will see, although 100 has been injected by the central bank, new deposits like 95, 81.2, 69.4, new deposits have been created, creating more money in the system. So at the end of the entire process, if you add up all these deposits, you will get broad M. That is the total money created in the economy, which is dependent on money multiplier. So if money multiplier is 4, for example, this 100 would create how much money? 400. If money multiplies 10, how much money will be created? 1000 money. So this 400, now you can divide into two parts. What are the two parts? That 400 has 100 created by the central bank, 300 created by the banking system. Now this is a very complicated process. Even if I am putting in very simple numbers, very complicated. But for our understanding, the total money created in the economy is basically includes the central bank money as well as money injected by the money created by the banking system. Okay. Then in this slide, I'm giving you the same illustration in different way. As I said, central bank is there, commercial bank is there. If you consider other banks, those are also there, right? All these create new money to the system. Now in this simple illustration, you will see the green part is the money created by the central bank. The orange part is money created by the commercial banks. If you take other institutions, the blue part indicates money created by the other institutions. So all this money is becoming larger and a big component of the economy through money creation process. That process we call that as fractional reserve banking. Why fractional reserve banking? This happens because commercial banks are keeping a fraction with them and giving away the other fraction as loans, which means expansionary monetary policy. So in the banking system, the multiplier is determined by the reserve requirement. Now I told you, here we have assumed reserve requirement as 10. If you change this, the amount that can be kept by a commercial bank would change. If it becomes 5%, commercial banks can give more loans. If it is 2%, they can give more loans. If it is 15%, they can give less amount of loans. So in this chart, you will see as the reserve requirement changes, the deposit creation ability will be changing. For example, at reserve ratio 10%, you create more deposit. At 30%, you create less deposits. At 50%, you create fewer amount of new deposits. So through the change in the reserve requirement, we can change the multiplier of the economy. Right? If you want to calculate multiplier, it's very simple. Now here from this equation, you can do it, right? From this equation, you can calculate the multiplier very easily. Why? When you have the broad money supply, when you have the base money supply, the ratio is multiplied. That is one way. The other alternative way to calculate multiplier is given in this slide. You can take the multiplier as the reciprocal of the reserve ratio. Reciprocal means basically 1 divided by reserve ratio. So if it is 10%, multiply is 1 divided by 10%. If it is 5%, 1 divided by 5%. That will give some rough idea how much money is created through multiplier process. So here we have an example, very simple exercise. I have given you some hints. Monetary base is basically C plus D, right? Money multiply is basically M, simple M. Money supply is basically capital M. And we are given some numbers, initial deposit, which means B is given. Reserve ratio is given 20%. Compute the money supply. So we know the equation to compute money supply. Can you do it and let me know how much money is the total money is in the economy?
So 5,000?
Sorry,
5,000?
5,000. Okay, let's see others' answers also.
$5,000, sir.
5,000. Okay, 5,000. Any other answer? How did you calculate?
Five into 1,000, sir.
5 into 1,000. 5 means what?
Money multiply.
Money multiply. Okay, I think you got the idea very clearly. Now in this case, to compute money supply, we can rely on this equation. Broad M equals simple M into B. Broad M, the total money supply, which we don't know. Simple M means what? Basically, money multiplier. B means the base money initial deposit. Now we have B given 1,000, but we don't have simple M, we don't have capital M. Simple M, we know how to calculate, right? It's the reciprocal of reserve ratio, 1 divided by RR. So which means 1 divided by 20%. Very simple, 1 divided by 20% means 1 divided by 0.2 equals 5. So 5 into, as you said, 1,000, money supply is 5,000. I think it's very straightforward and clear. And also that clears the idea of multiplier, the importance of reserve ratio, and how it determines the speed of money creation. Okay. Now, what we have really experienced from this example is actually money creation process is determined by some other factors. So at least we can identify two important factors. What's the first one? People's money demand. How much money people would like to keep in their hands. More money they would like to keep in their hands, less money creation. Second factor, what is the reserve ratio of the central bank? Higher the reserve ratio, lower the money creation. Okay? So I have made it very simple and clear. I mean, that is the required level in our exam. Okay. Any questions before we move to next part?
Will we receive these kind of questions in exam paper, sir?
In exam, yes, you have these type of questions. For example, you have to calculate the money multiplier. You have to calculate the amount of money. Yes, it's there. Any questions? Can we move to the next part? Yes. Now, there is a concept called, now this money creation, it happens in an economy in usual normal times, right? So if you look at this process, you will see it is a very standard process in an economy. People would borrow from banks, people would deposit money in the banks. So it's normal banking activities, and through that process, money is created. So in an economy, in normal, this is a normal situation, normal time, economy's money will basically, gradually increase. If you draw a chart, money will be increasing like this, very simply, right? But there are some situations money will increase like this substantially. Those are in extraordinary times done by banks and commercial banks deliberately. So as I said, during normal times, central banks apply limited amount of money. So in this chart, this is, very limited amount of money. Money is increasing at a slower pace, likewise. This is normal time. During crisis or extraordinary times, money can increase like this. This is extraordinary times. Why? Because of yes. Sorry. Did you say
because of because of other countries' loans?
Because a situation called quantitative easing. Quantitative easing means during extraordinary times, central banks are injecting more money to the economy. I told you, central bank cannot do it by, taking a lorry and distributing money. What can they do? They can do whatever the instruments available. They can buy government bonds, private bonds, company bonds, other type of securities, even stock market securities. By buying those things, central bank is conducting an activity called quantitative easing. What do you mean by quantitative easing? Basically, injecting more money to the economy to stimulate the economy by way of injecting money. So normally money would increase like this. In extraordinary times, money would increase like this. This difference is actually created by central banks' additional activities to purchase securities in the market, both government securities or private securities. That we call as quantitative easing. Quantitative easing is done by a central bank during extraordinary times to create demand in the economy, to stimulate the economic activities in the unconventional or extraordinary times. Clear? Any questions?
Sir, is that what when we have this COVID situation and tsunami situation also, we got some supports from that's mean donations from other countries. So those are also coming under this.
It's not actually coming under quantitative easing. That is also cause of increasing money, but it's not quantitative easing. Quantitative easing actually, this has been done mainly by Western countries. If you look at countries like USA, UK, European Union, Japan, Australia, they have done it in a large way. Even we are doing, but normally we don't call it quantitative easing because we don't buy private bonds, right? But we also inject more money during extraordinary times. As you said, during tsunami times or COVID times, the central bank has injected more money. Clear?
Sir, thank you.
Can we move to the next part? Right. Now we are moving to understand these different money supply measures in Sri Lanka or monetary aggregates in Sri Lanka. In Sri Lanka, we actually have four major definitions of monetary aggregates. Sometimes you might call it five because in some cases here we have another component M2, but we keep it silent right now because the major ones are given as M0, M1, M2, B, M4. But don't get panic if you see M2 and also there are five aggregates. That there's nothing wrong with that, right? But basically we can say there are key monetary aggregates in Sri Lanka to analyze monetary developments. What are these aggregates? We have reserve money, we already know it, M0, which we call as base money. Then we have another component called narrow money, which means M1. Then we have another component called broad money, M2B, then another component, financial survey, which is M4, right? All these are used in analyzing monetary aggregates or developments in money in Sri Lanka. Why we need to understand this clearly? There are questions, exam questions in your paper for calculations. Someone asked whether we have to do some calculations. No? So this is the major part of calculations. Others are only, very few minor calculations, 1 or 2 marks. But here, this part, sometimes it entails 20-mark question, right? It's very significant. So we have to understand very clearly. So we'll start with each of these definitions and try to understand them very clearly. First one, reserve money. Reserve money, we already know it is M0. Only thing in Sri Lanka, we don't highlight this term M0. So that's why I don't use it very often. But if someone says M0, doesn't matter. We call it base money. It's very clear because it's the foundation of money. Also, we call it high-powered money because we have seen its ability to multiply money. Remember? When you put 100 into the system, it will become 400, 500. So it has power to create more money. How do you define reserve money? It's the total of money printed. Remember, I told you printed money means money issued by the central bank to the economy. So it's the total money printed or issued by the central bank. Sometimes we call it monetary authority because in some countries we don't have central banks. We call it as monetary authority. So this is the total amount issued by the central bank. Now, when you say money issued by the central bank, up to now, probably you might thought only notes and coins are there. Okay? Notes and coins are the major component, but other components are also there. But as a result, we can identify reserve money with at least in Sri Lanka 2 major components. Third one I have put it in brackets because it's very minor amount. What do we have? Currency in circulation, commercial bank deposits with the central bank. Now can someone tell me what are these components? What is currency in circulation?
People using money, the transactions.
Yes, notes and coins. If you look at this pie chart, around 70% is coming from what? Currency, notes and coins. What is this balance part? Commercial bank deposits with the central bank. What is that?
SRR,
Yes,
SRRR.
exactly, SRR balance. So that SRR is basically the balance kept by commercial banks at the central bank. Remember? Now someone told me it's 2%. Yes. 2% of total deposits, right? They are total deposits. But in terms of reserve money, it could be more than that. It could be that it may not be 32%, could be even higher or lower. But roughly, the balance of the reserve money is coming from SRR balance kept at the central bank. So this is how the monetary base is identified by us. Now I told you, early this is central bank money creation. This money creation does not happen automatically or as a magic. To do that, central bank should engage in some activities. What are these activities? Central bank should buy, sell financial assets. So that will change the monetary base. When the central bank engage in markets, that will change the monetary base. Now, for example, when central bank is buying foreign exchange, that will increase the monetary base. When central bank lends to banks and government, that will increase the monetary base. When central bank purchasing treasury bills, that will increase the monetary base. So all these would generate money and increase money as the central bank intervenes in the foreign exchange market or in the domestic market. Similarly, when central bank engage in foreign exchange market by selling securities or paying loans by the government or the institutions, selling treasury bills, selling foreign exchange here, that will result in a decline in the monetary base. So the net result is the change actually, right? In buying and selling, there should be a net effect now. Net effect is reflected as the change in money. So what are these net effect? Buying and selling foreign exchange means there is a net foreign asset change. Buying and selling government securities or giving loans in the domestic market means there is a net change in the domestic assets. So here in this formula, simple formula, I have put it very clearly. The monetary base of a country is reflected by net foreign assets of the central bank and net domestic assets of the central bank. When this change, the money supply would change. Money issued by the central bank would change. I think this is the most simple principle that I can discuss here. This is, as I said, when it comes to operations, this is complicated. But we can simply understand how money is created. So when you say mudal achchu gahanawa maha bankuwa, the word which indicates either of these factors should change. Either foreign currency purchases should change, either domestic assets should change. Clear?
Yes, sir. I have a small doubt, but not related to this. But all are saying no, the dollar is not enough, so dollar transactions not able to do this much of only we can do. Those what is that?
Which means right now.
Yes, sir. The dollar transactions, the limited transaction on can we do those kind of things?
No, what you are saying is, I think these days we don't have too much dollars in the market, right?
Yeah, sir.
We have some scarcity of foreign exchange because tourism is low, exports not that high, foreign remittances coming, very in a moderate way. So as a result, the country does not have, excess amount of dollars these days, right? Dollar is basically, it's a kind of a limited amount we have. I think that is the area that you are talking. It's not this discussion, right? We are talking about this is central bank money.
Yeah, sir. Thank you.
Those excesses and deficits, they have a link between this concept, but what we are talking right now is not related to that. Okay. Then,
So what is LEA?
yeah,
Sir, what is NDA?
Right. Okay. I was telling foreign assets can change, domestic assets can change, right? Any foreign exchange transactions, those are actually reflected in net foreign assets of the central bank. This is actually from their balance sheet, right? We are looking at the balance sheet. By only looking at the balance sheet, you can understand this. Then you have net domestic assets, which means transactions in the domestic market, which means giving loans to banks, giving loans to government, buying government treasury bills, bonds. Those are under domestic assets, net domestic assets. Clear?
Yes, sir. Thank you.
Okay. So here we have some actual numbers from the central bank annual report. Now I have taken this from the latest annual report. Reserve money in 2020 we have 964 billion reserve money. How it is created? Net asset foreign assets of the central bank is 500 something. The balance is net domestic assets of the central bank 400 something. Now in this column you will see it has changed compared to previous year, right? Reserve money has increased by 31 billion, but how it has been increased? So the change is given by these two numbers, the delta. But you will see foreign assets negative. Why? Last year, as I said, no foreign money came in. Substantial amounts were not there. Domestic assets increased heavily. Last year, the central bank gave loans to market, government, etc., etc. So you will see how money has changed during last year. Okay. So in this chart, you will see reserve money movements, again from the central bank annual report. There are some peaks in this chart. I think we discussed one day, even in this currency in circulation, you see this peak. What do you mean by such peak? Those are the periods of festive season. During festive season, people demand more currency. More money is needed in their hands. So that's why you see a change, a substantial change in currency and reserve money during the festive season, especially in April and also in December. Okay. Any questions on this? Right? Can we move? So this is M0. What we have discussed up to now is M0. Then we have other three important aggregates, M1, M2B, M4. So when we expand this definition like M1, M2B, M4, what we do is we basically add other financial institutions to this discussion. So when now we start with M0, no? M0 is the central bank. So if you add central bank and commercial banks, then it will become M1. Then M1 plus commercial bank, some other deposits, then it will become M2B. Then you add other financial institutions, then it will become M4. So as long as you include financial institutions who are dealing in money and deposits, we can have broader definitions of money. And out of this, bank role is the most significant part, especially commercial banks. So let's look at these variables one by one, M1, M2, B, M4. So M1 is given here. In M1, what do we have? Simply currency held by public, demand deposits held by public. Currency held by the public means we are taking the central bank money amount. Remember, central bank has issued money. There's a slight difference actually. You have to keep that in mind. Now remember, I told you in reserve money we have currency in circulation. Remember here, currency in circulation. Now this currency in circulation means not the currency only with the public. Currency held not only by public, even the banks, they have currency, right? So that entire component is currency in circulation. But M1, for M1, we don't take entire currency in circulation. You have to deduct what banks have. That part we have to deduct. And as a result, what we get is currency held by the public. So that's why we have currency held by public here. Demand deposits held by the public means we know in commercial banks people have current accounts. In monetary analysis, current accounts are very liquid. It's like money. You can withdraw money at any point. So it's a very liquid instrument. So you consider it as first component of money other than currency. So we include demand deposits held by the public. I recommend you cut down these DBUs and all these terms because otherwise it will confuse. Let's cut it. If you really need, I can explain, but we don't need it at this level. So simply currency held by the public, demand deposits held by the public, that forms M1. M1 is narrow money. Then we have broad money. We have M1, M0, M1. Now we come to M2. Actually, in Sri Lanka, we call it M2B. Earlier, we had this M2. Now we don't use it, very commonly. Our main variable is M2B. In M2B, we include other type of deposits as well. In commercial banks, we know not only current accounts, there are other accounts. Savings accounts are there. Time deposits are there. Time means fixed deposits. We'll have to consider and include these type of deposits as well. So as a result, we get a measure called broad money, M2B. So in M2B, we have total currency held by the public, right? This is taken as, part of M1. We have already calculated it. And then we have demand, time, savings deposits of the public. If you look at this pie chart, you will see out of broad money, more than 86% is coming from deposits. Only the balance part is currency. So you can define broad money as C plus D, currency and the deposits, right? So here we have arrived that, derived that in a simple way. To get M2B, first we have to have M2. M2 is taken as M1, which we have already done. Time and savings deposits of commercial banks. Okay. Then you have M1, M2. How M2 becomes M2B? You have to add another type of deposits. Those are foreign currency deposits of the commercial banks. Now you know in Sri Lanka, commercial banks, they are having foreign currency deposits. Dollar deposits, sterling deposits likewise. Those deposits are in the banks. So we add up part of these deposits into M2, then it will become M2B. So this is the major variable in Sri Lanka, M2B, where you have currency, domestic current accounts, savings accounts, and time deposits, plus part of foreign currency. Earlier, you remember, I think we had these RFC accounts, NRFC accounts, and all that. Now we have different terms for those accounts. So you can commonly call it as part of foreign currency deposits. Part of foreign currency deposits. Okay. Now, similar to the case of the central bank, this money does not, prevail by magic. It has to be supported by factors. So when I say it has to be supported by factors, we can identify the source of broad money. Now earlier, when we identify source of base money, we only had the central bank. Remember? We had NFA of the central bank, NDA of the central bank. Now, as we expand the money supply into commercial banks, now we have commercial banks also. Which means you have to look at net foreign assets of the entire banking system, net domestic assets of the entire banking system. I'm not going to discuss this in detail because it's not really relevant to our exam. But I will tell you only one thing here. In this domestic assets, as I said, foreign assets means transaction in the foreign exchange market. No? In domestic assets, the most important component is the private sector credit. I already told you, I think. Private sector credit. That is the largest component. When we borrow from a bank, when we take a loan for any purpose, that will add up to total money supply. We have seen how it happens now. When you borrow, that will create a new deposit. That will become part of money. Right? So, the private sector credit, as people borrow from the banks, that creates more money. Not only private sector, even to the government, you can lend, even to public corporations, you can lend. But the most significant component is private sector loans. Now, if you look at this table, again, this is from the annual report, you will see the total amount of money is 9.4 trillion. I told you this number earlier also, remember? How it is created? Net foreign assets, negative 209. Net domestic assets, plus 9,600 billion. Out of this, you will see there are three major components: credit to the government, credit to corporations, credit to private sector. For private sector credit, it is the largest component if you look at this number. Out of 9,600 domestic assets, more than 6,000 is private sector credit. So more than 2/3 of the domestic assets are from private sector. So this is the key message out of this table. I want to tell you one more thing here in relation to our exam. Sometimes we need to understand how to calculate the growth rate, right? Now here you will see the broad money has changed 23% by 23% in 2020. How this has been calculated? You need to know how to calculate this growth rate, because sometimes you have to use this in exam answering. How this 23.4% came? That is the growth rate between 2019 and 2020. So how do you calculate it? So here you have 9,405, right? And then you have 7,624. You take the difference between those two divided by the previous year. Multiply by 100, you get the growth rate. So you can write it in a formula: T1 minus T0 divided by T0 into 100. This is the percentage change. Clear? You need to know this. Calculating the growth rate. The next on the final aggregate is M4. When you calculate M4, we have another type of institution, not only commercial central bank, not only commercial banks. Now we have other financial institutions also. In Sri Lanka, what are the other financial institutions who are taking deposits? We have two type of institutions: LSB, specialized banks, banks like National Savings Bank, HDFC, Sanasa, etc., and finance companies, because they also accept deposits, aren't they? They have time deposits, they have savings accounts. That is also part of the broader money supply in the economy. So the broadest variable is M4. How do you calculate? M2B plus time and savings deposits of other financial institutions. But I told you in Sri Lanka, the most important variable is M2B. And in your exams also, what we have seen up to M2B. Okay. In this chart, I have summarized all these indicators, all these monetary aggregates. Base money, M0, currency in circulation, commercial bank deposits, very simply. Narrow money, currency, actually here it's very clear if you call it held by public. Otherwise you will get confused. Then demand deposits. M2, I told you this is a intermediate stage to calculate M2B. There what you have, narrow money and time and savings deposits of commercial banks. Then the most important variable M2B, how do you calculate? You take M2 plus foreign currency deposits. Then finally we have M4 including specialized banks and finance companies. So in this chart, I have taken this from the annual report. You will see how the monetary aggregates have been moving over last few years. Now this year, in 2020, you will see the highest growth is reported in M2B and M1, right? Because last year, as we have seen, most of the factors of money, it experienced an increase, especially loans in the domestic market. Government has taken large amount of money from the banking sector as loans. So this has caused money supply to increase, especially in 2020. This period, if you look at, you will see it's a normal period. 2017, 18, 19 is a normal period. So normal growth rate can be observed. But in this part, we will see a substantial pickup in money due to various reasons, especially due to the COVID pandemic. Now, related to our exam question, this is very important table, because this is a summary of all calculations. This is available in your annual report, chapter 7, right? What are the important components here related to our exam answers? First, we need to know how to calculate reserve money. Reserve money, it's a summation of three components, remember? Currency, commercial bank deposits of commercial central bank, and the third item, government agency deposit. I told you this is a very minor amount. So even in our exam, we can exclude this because this is very simple, very small. But you need to know what are the components you take for reserve money. Then the next important item is narrow money. Remember, narrow money is calculated as currency held by public and demand deposits. Then the next important item is broad money supply M2B. How do you calculate it? You get M2. M2 is calculated here as the time and savings deposits added to narrow money supply. And then we take adjusted foreign currency deposits, I told you. So those three calculations are important for the exam. And here there are two important numbers, additional numbers, money multiplier and velocity. Multiplier we already know. Remember, how do you calculate multiplier? M2B multiplier, how do you calculate? You take M2B amount divided by reserve money. This is how we calculate multiplier. Broad money supply divided by reserve money. Okay. Then we have another concept called velocity. Velocity, I hope you remember in the previous session I defined as the speed of circulation of money in the economy. For example, if you inject 1 rupee to the economy, what is the speed that 1 rupee is circulating in the economy? That is calculated as the velocity. How do you calculate it? To calculate velocity, we need M2B and you need GDP. GDP means the national output. You need nominal GDP. Nominal GDP divided by money supply is the velocity. Now, if you look at these two numbers again, money multiplier is 9.75. What does that mean? If you put 1 rupee to the system, that will create 9.75 rupees. More than 9 times multiply. As our reserve ratio 2% very low now, this is high. Remember, somebody told me this reserve ratio. Velocity is 1.76, which means if you inject 1 rupee to the system, that will circulate a speed of 1.76. Okay. So this is very important in terms of understanding the calculations in our paper. So the last slide in this discussion, I have included some of the key monetary aggregates in the road money M2B. Key factors.
Excuse me, sir.
Yes,
Sorry for disturbing. How to find this NGDP?
it's given. In this table, we don't have, but normally it's given.
Okay, sir. Thank you.
We don't need to calculate, right? So here, last year, Sri Lanka's monetary aggregates, the movement, M2B, I told you. Last year, the most important significant component is the credit to the government. Even this chart, you will see the government has borrowed heavily. Then we have seen some pickup in private sector credit towards the end of the year after this COVID pandemic. Private sector credit is also gradually picking up. The blue line is earlier it was showing some decline, then it has started picking up. So these are some factors of money supply. Okay. Now, what I want to do in the remaining half an hour or so, let's try to do some calculations, isn't it? What do you think? Any feedback?
Will do, sir.
Will do, no? Then you will be very
Okay, sir.
familiar with these calculations and answers. Right. Let's turn to question on money in 2019 paper, March. I'm taking a couple of questions only because all are broadly similar. Okay. This one. We have this question in 19 March paper. We are given numbers for 2016 and 17 currency deposits, adjusted foreign currency deposits, GDP, etc., etc. Now, if we can do this question perfectly, then we will understand most of the things very clearly. Okay. Now, before I discuss, I want you to attempt this. Otherwise, no point I'm giving you an answer, right? Answers. So it's your duty. We have more than half an hour, 45 minutes roughly. You can attempt this question. First, I'll give you roughly 15-20 minutes. Then we'll discuss. Okay. Now, I want everyone to try. Don't, stay like, doing nothing. Then you won't learn. I can do this very easily and tell you the answers. Even I can show you the calculation, but that doesn't help. So I really request you try this thing. Okay, now this is time 4:15. We'll come back by 4:35 to discuss. So can you try? Okay. You have the questions with you, right? Do you need the screen?
Yes, sir.
Okay, I'll put the screen back. All good? You're
Yes,
working?
sir.
Okay. So let's come back in 5 minutes to discuss. I think still some of you may be working on that. I see some of your answers also. Very nice. Shall we discuss? Hello?
Sir.
We'll start, no? If you have
Okay.
answers, sorry. If you have answers, please voice your answers because I can't see the chat right now. Okay, let's start. Question number 8. I told you this question is having 20 marks. So it's substantial. So question 1, we as answer the, sorry, question 8, answer the questions based on the given monetary economic data for the years 2016 and 2017. Number 1, calculate the reserve money for 2016 and 17. Discuss the changes in reserve money during 2016 and 17. What is the figure for 2016 reserve money?
855 billion.
855 billion, exactly. How do you get it? So I'm writing answers for 2016 on this side, 2017 on this side, right? If needed. So reserve money, how do you get it? You have to add up which components? You have to first add up. Somebody told me 855. So how did you get that thing?
Currency held by public.
Currency held by public, which means 429. Yes.
And the currency with commercial banks.
Currency with by commercial banks. Yes.
And the commercial banks deposits.
Commercial bank deposits. Why did you take currency held by public and banks together? What's the reason?
Because that is the currency in circulation.
Exactly, currency in circulation. So CIC basically comes with these two components. So reserve money, if you add up all these three, 855 for 2016, for 2017, how much?
938.
938. Exactly, excellent. What is the change in reserve money? What has happened during these 2 years? Reserve money has increased or decreased?
2017 it is increase, sir.
Increase, yes. From 855, 938, it has increased by how much? 83 billion. So if you're given that answer 83 billion in your exam, you get marks. Reserve money has increased by 83 billion. Alternatively, someone can calculate the growth rate as well, isn't it? How do you calculate growth rate for this matter? 938 minus 855 divided by 855 into 100. You get the growth rate also. I don't know what is the growth rate, but if you calculate this way, you get the growth rate. So first part is done. Second part, calculate the narrow money supply, M1, for 16 and 17. How much for 16?
429.
How much? 100.
Sorry, total amount is 2016 776.
Okay, 776, yes.
And 2017 792.
792. How did you get it?
2016 429 plus 347.
429 means currency held by public plus demand
347
deposits held by
commercial bank.
Right, these two.
Yes.
So the rationale is we don't take full currency in circulation to calculate M1. We only take currency held by public and demand deposits held by the public with commercial bank. So it comes to 776. For 2017, it comes to 792. So M1 has increased by how much? 16 billion. Right? So again, you can calculate the growth rate also. Whatever you have done, you get marks if it is rightly done. Then part 3, calculate the consolidated broad money. Consolidated broad money means M2B. We know it, no? We are not bothered about M2 in Sri Lanka. Earlier, M2 was the key variable. Now, we talk about M2B mainly. But of course, you have to have M2 when calculating M2B. Okay. Now let me the answers. Let me know the answers for M2B for 2016. How much?
5404.
5404. How did you
2000.
get this?
That is currency held by public. Demand deposits held by public with commercial bank.
Right. Now
And
for that,
time and yeah.
Yeah. Wait. I really appreciate your answer. For that, I think you have already done the first part, isn't it? M1, isn't it? So M1 you have calculated here.
Yeah.
So you take M1 straight away, 776 plus what else?
Time and saving deposits.
That is 4046.
And adjusted foreign currency deposits.
And adjusted foreign currency deposits. Exactly. If you don't add up adjusted foreign currency deposit, it will become M2, right? So to make it M2B, you have to add up adjusted foreign currency deposit as well. So you get 5,404. Correct. Good. What is the amount for 2670?
6306.
6306. Correct. So what has happened to broad money then? It has increased or decreased? It has increased for sure. By how much? 902 billion. Right? Now you can see money has increased and you can calculate the growth rate as well. Now in some papers I have seen they ask whether the money change has been slowed down or increased. There are some questions like that. Now for that matter, sometimes you need to calculate the growth rates and see. By simply looking at the rupee amount, you can't tell it. Right? So be prepared for both. Last one. Calculate the velocity of money and what has happened. How do you calculate velocity?
GDP divided by the M2P.
GDP divided by the M2P. So GDP is given at current market prices. What do you call it? I told you, if it is at current market prices, you call it what? Nominal GDP. So nominal GDP 11,839 divided by 5,404, which means broad money supply. So how much is the velocity for 2016?
Uh, 2.1907.
For 2016? 2.
Yeah, 1907.
Okay.
2017, 2.1152.
Does anyone have a different answer? I didn't calculate actually. I'm just checking these numbers using my calculator. Let's see whether you got right. 11,839 divided by 5,404. So it's 2.19. Yeah, correct. Then you have 2.11. So velocity has increased or decreased? It has come
Decreased.
down. It has come down. Now in some papers, in some papers they say what are the reasons? They ask why velocity has come down. Now in an economy, this money speed could come down mainly due to, now from this you can see the changes in GDP or money, right? That could be the direct reason. But impacting that could be things like, innovations in payment systems, right? So when people have payment innovations, some other ways of, making transactions, they might be using, less amount of money for their transactions, some other instruments. So that could slow down indirectly the velocity. In some countries, we have seen when technology has increased, it has caused a reduction in velocity. Okay. I think most of you have done well. I presume others also follow. I could hear a couple of voices only, but I am sure others may have tried these questions because it's really, really important that you have this practice. I think there are a number of questions in the paper, in different papers. So please try them. Then you will have some good practice.
So growth rate will be calculated by the
Growth rate, yes.
calculated from 2017 16 minus 17 the amount divided by the year or any amount.
Divided by the amount of that particular year.
The current year.
No, the
The previous year.
previous year. So it's T1 minus T0 divided by T0.
Previous year amount.
Yeah.
Okay, T1 minus by T0, T0. Thank you, sir.
Multiplied by 100. In
Thank you.
Excel form, you can do it very easily. How? You take, now let's say reserve money and 938 this year, 855 this year. Shall I erase some of these? There's a shortcut in Excel or even in your calculator. You can use that shortcut as well. How? You divide current year 938 by the previous year minus 1 into 100. You get the same answer. You don't need to take the difference and multiply. You can straight away do this using Excel or your calculator. Is that clear? Now I want to look at another question. I'm not going to have calculations anymore because most of the calculations are in same way. So I'm not going to do other calculations, but I want to move to the latest paper, 2021 paper. There are two questions
Excuse me,
related to
sir.
this. Yes.
Uh,
Yes,
Sir,
please go
if
ahead.
when we are calculating the velocity of money,
Hmm.
then we have to calculate according to the M2B or M2. That is stated
Now
in the question paper.
it depends on the question. Now, in some questions, probably you might have to answer up to M2, right? In some past papers, I noticed they only asked to calculate M2 because foreign currency part is not taken. Now, let me show you one thing. So here, if you look at this one, can you see my slide? There you calculate
Yes,
M2
sir.
because foreign, yeah. Here you calculate M2. Why? You are not given foreign currency. So if foreign currency is not given, you have to stop at M2. You can't calculate M2B. So in that case, you calculate velocity using what? M2. Clear? Is it clear?
Yes. Yes, sir.
Oh, okay, great. The last thing for the day we do, basically, in the latest paper, we have these two questions. First thing, briefly explain how central bank injects new money to the economy. Money creation process of the central bank. Now, I just discussed with you, money created by the central bank is identified by through two factors, net foreign assets and net domestic assets. Remember this equation? Remember? Both together we calculate B, the base. So what does this mean? So in for this, now if you look at the what do you call the marking scheme for this question, it only gives you one way of answering this. Now actually you can answer this from two angles. First angle is this NFA-NDA approach. So you can write it here by purchasing foreign currency based on this NFA-NDA approach. Giving loans to government, loans to financial institutions, purchasing treasury bills. So that is one way of answering. So this first one is related to net foreign assets. The second one is related to net domestic assets, second, third, and fourth. Okay, that is one approach. In the marking scheme, this has been given in a different way in terms of monetary policy. So it says through expansionary monetary policy. Expansionary monetary policy means the second approach. You can increase notes and currency, issuing physical currency to the economy. You can reduce interest rates. Next session, next week, we have interest rate and monetary policy. There you will see when central bank is reducing policy interest rates, that's basically creating more money. Increasing reserve money. We know reserve money means not only currency and notes and coins. Reserve money means it also has central bank deposits of commercial banks, right? And also another answer is given, they are reducing the reserve requirement. But the issue is this reserve requirement does not have impact on the central bank money creation process. Okay. For the broader economy, this is applicable. But I think in the marking scheme it has given, it's not right. I think we should not take it as a factor that affect the central bank money creation process. And also another answer is given, QE, quantitative easing. I think we just discussed today, quantitative easing means purchasing assets by the central bank from the government, from the market, from the private sector during extraordinary time. So you have to give a clear answer based on one of these approaches without mixing. If you say increasing currency and purchasing T-bills, I think it's a mix. You have to be very clear either from the sources. The approach one is based on the source. This approach is basically based on the use of this currency, interest rate, etc. So that is first question in 2021 paper. In the last question, in the sixth question also, it asks whether what is the definition for broad money. 6.4, define broad money supply. Broad money supply means M2B. We know M2B is the most important definition of monetary aggregates in Sri Lanka. It consists of what? Few items. So I'll write it. It consists of currency held by public, demand deposits held by public, time and savings deposits held by public. You may write these notations, right? Otherwise you may not remember later. Currency held by public, demand deposits held by public, time and savings deposits held by public, plus adjusted FD of public. Adjusted foreign currency deposits of the public. All this equals to M2B. This is what we have done right now in the previous question. Okay. Clear?
Yes, sir.
Any questions? I only hear few voices, right? I would like to hear other voices, sweet, young voices of our crowd, but I only hear one or two voices most often. How about others? Any idea, any feedback? Are you clear on money? I have spent, I think, 3 weeks and I have used damaged my throat discussing these in detail. I hope it's clear. And as I said, I recommend you look at all these questions, and I really recommend you read these two references. The annual report 2021, chapter 7, right? Especially there is a section on monetary aggregates, few pages. So please read it. You will get a very clear idea. You will see how money is created, how money is impacting the economy, how money is changing, what are the dynamics. Everything is discussed in this chapter 7 of the annual report. And the way to progress is reading this chapter. It's very clearly written on the movements of money. And also there is a pamphlet published by the central bank, educational pamphlet, price stability pamphlet. There you have a section again on money and monetary aggregates. So please read those two. It's really, really important. And that will make you very knowledgeable on money. Right? This is very important variable. And other than that, you can basically attempt to these questions. There are a number of calculating questions. Somebody asked me whether we have questions on reserve ratio. Remember? I told you that 1 divided by RR thing. Somebody asked. So March 2018 question is exactly what we have done today. So please try those things. Others are basically, structured type of questions. You have to give some answers. Here also you have this reserve ratio question. If initial deposit is 1,000, SRR is 20%, calculate money supply. I think this is the exact question we have done today. Okay, I think we are in good shape in terms of money. Some questions are there. Can we use calculator for the exam? For sure, you can use. Normally, I think in exams you use non-programmable calculators, right? Usually. So you can use a simple or a scientific calculator. That's possible. Let me see whether we have another comments. I see most of you have done well in terms of answering. I think we are in good shape, isn't it? Next week, we will be talking about, okay, I got some good comment as well. We didn't get bored. That is the good thing. 4 hours of teaching and these technical things. I'm happy if you basically enjoyed the session. And some another comment, I didn't know before how money is created in the economy. Taught very well. Thank you. Yeah, thank you very much. Yeah, thank you. I see good comments. Maybe you have some negative comments in your minds, but even that can be shared. I won't be offended. But I really enjoyed teaching the class, even though it's 4 hours. Okay. Now we have very good, knowledge on money, sound understanding. Next week, we will be looking at how this money is impacting the economy. Now, money is a kind of really a dangerous commodity. It's like a dangerous person. There are good people, there are bad people, right? Good people, they are good always. Bad people, they are very, bad, and you can be they can be damaging you very seriously. So money, I would say, it's a combination of these good and bad. If you use it well, it will be good. If you use it in a bad way, that is really bad and worse. So money has some significant benefits to the economy as well as some disastrous impact on the economy. So we have to manage money well, and also we have to ensure that money is basically behaving in the economy in a sound manner. So in the next session, I'll be talking about money and monetary policy, where the money is managed by the central bank for the betterment of the economy using their policies. Okay, so next session is on monetary policy. So when you read this chapter 7, you will understand how money is basically managed by the central bank in order to run the economy in a stable way. We will do that in the next session. Okay. Someone asked question in paper 2021, it should be consolidated broad money or broad money supply. Now, consolidated broad money means exactly M2B. Okay. Now, in some questions, you might have calculate broad money supply. That's only. But as I said, when you see that calculate broad money supply, if you have the foreign currency component as well, please consider that as well. Clear? I told you one question. There you don't have foreign currency part. It only contain FDs. So then you have to only calculate M2. That is also broad money supply. But if you have foreign currency part as well, you have to calculate consolidated broad money supply, which is M2B. Okay. I hope it's clear. Okay. Thank you very much. Yes. Any comment?
I'm clear, sir. Thank you, sir.
Okay. Thank you, Dilukshi. Right. We are meeting next week. As I said, probably we will be meeting early in the morning, 7 o'clock. Either on 1st or 8th of August. I'll let you know. Right. So have a good weekend. Good evening. It's a Poya Day, holiday. Maybe some of you are looking for some religious activity. I don't know. But whatever you do, have some safer evening. Enjoy, relax, be calm. And let's meet soon in our next session. This Sunday, you are free, at least for the morning session. Okay. So let's stop here. Good night and stay safe.